we have covered the first leg of New Pacific's investment case, we will examine the second leg of the investment case, Carangas. Carangas is a large mineral discovery that New Pacific made in 2021 and have since drilled close to 80,000 meters on. The plan is to put out a maiden mineral resource estimate in the late second quarter of this year and complete a PEA in the fourth quarter of this year. Here you can see the deposit, and as you can see on the top, there is a thick zone, roughly 150 to 200 meters of silver mineralization, plus some lead and zinc. Then there is a lead and zinc zone overlaying a thick breccia pipe of gold. And as seen, there have been several impressive drill results, such as 515 meters at 1.10 grams per ton of gold, and we estimate that the deposit should contain somewhere between 1 to 2 million ounces of gold and 200 million ounces of silver equivalent ounces in the overlaying zone. In other words, Carangas is big, and the advancement of the project will add a great deal of shareholder value, which is why the second part of the Q&A will revolve around Carangas.
It's a very large mineralized body. The area was originally discovered and exploited during the Spanish colonial era. So when you're out there on the property, there's all these little workings all over the place where very high-grade mineralization, actually not too dissimilar to what we see at Silver Sand, was exploited for quite a period of time. And what we've recognized is that, or what Alec Zhang has done a wonderful job of daylighting, is the fact that the silver mineralization sits on top of what appears to be a very large, I'd call it a pipe, but I don't really know what its geometry is yet, but a big vertically oriented body of mineralization, which is gold rich. And so you have a transition from silver to a base metal zone, lead zinc, and then below that you have up to 500 meters of plus gram gold. That's really remarkable. It also, when you think about it, it looks very much like what you would see just across the spine of the Andes to the west in Chile. So big deposits of this type are known in Chile, with the high silver transitioning to gold. People haven't really looked for them in Bolivia, but it's a logical thing to do. What IP is good for, especially good for, is picking up disseminated pyrite. So fool's gold, it's a common alteration product within and around this type of ore body or mineralization body. And IP does a very good job reflecting that. So what you do is you use the IP to determine where the disseminated pyrite is, and then figure out within that body where the zone with the gold mineralization is. So it gives you a feel for the size of the ore body or the mineralization body, and where you would want to look within it for higher grade zones, for example. Well, I think it's important to understand that in exploration, it's dangerous to decide that what you have found is actually the best thing that's there. And so when you're looking at something in terms of a large integrated district, and when I say large, I mean big integrated ore systems can be 5 by 5 or 10 by 10 kilometers. So, and within that, you could have a multitude of mineralization centers, each one mineable in their own right. But you want to be very careful, especially doing blind exploration, which is part of what we're doing at Carangas. I mean, the gold zone that is getting everyone excited does not show up on the surface. What you see on the surface is silver on both sides, and then you see this broad valley where erosion has cut way down into the rocks, and so there's no surface expression of that gold zone. And we see very large areas of deep erosion around in the same general area that have no drill holes underneath them. So the first thing you want to do is you want to try to understand the overall system to make sure that where you're focusing your exploration is the best place. And it's nice to have one really good thing, but until you know that it's the best, you got to keep looking around. So the IP survey done on a much broader area gives us an idea of whether we have other mineralized centers to put drill holes into, and then see if they carry grade.
Let's move on to Carangas, your new flagship project, more or less. So there's a clear plan for Carangas this year. What could we expect in next year after you have released the PEA?
Great question. It's funny, nobody's actually asked that question before, and so you're kind of catching me off guard. But if I were to hazard a guess, so this time next year we're going to have Carangas with a resource estimate and a PEA, and so really I think there'll be, so option one is that we can continue drilling. Drilling is expensive, and this would be drilling in and around the existing discovery. We can potentially step out on the gold system at depth or the shallow silver system. That could be something that we could embark on. Drilling is expensive, and so we're very mindful of shareholder dilution given where our shares are trading. So that'd be like option one. Option two, as I mentioned, we're completing a large-scale regional geophysical survey, which may highlight some interesting targets for us to drill. Again, looking for more Carangases in the district. So that could be something that we could work towards next year. Permitting, social engagement, as I mentioned with Silver Sand, what we found this year is that having that mine plan has given us the ability to talk to the direct impacts of the project with the communities and really you get down to some substantive nuts and bolts kind of discussions. And so we could also begin to embark on those kinds of discussions at Carangas if we want to follow the path at Silver Sand. So that's something that we could look at doing next year. And perhaps taking it to a pre-feasibility study is something else we could do next year. I think those are kind of four options that we'll evaluate really in the context of the market. Like as we talked about, we haven't got really much value at all for the Carangas discovery in our share price. And so we want to be mindful of where our shares are trading. If our shares are trading somewhere where we're actually getting recognition for the hard work that we're putting into Carangas, then that would lend itself towards adopting a more aggressive program towards advancing the project, with those four different options that I've just outlined on the spot here. And then maybe, depending on where the market is and how much credit we're getting for Carangas, if we're still, struggling to get that traction, then, maybe we don't spend as aggressively and we just focus on, targeted high impact projects, like maybe maybe completing the pre-feasibility study and the permitting and doing a little bit less as far as flushing out the exploration potential. So that would probably be, and I think as well the context of the market and strategics, like Carangas will be a bigger project than Silver Sand. And as I mentioned before, Silver Sand is a project that is very easily financeable and buildable by a project of our scale. Carangas, as well as maybe there's some strategic partners out there, or that's a path that maybe that's path 5 that we want to pursue next year. So I guess long story short, it's a little bit too early to really concretely say what our plans are, because to be quite frank, we don't have 2024 plans for Carangas, but I hope that gives you a bit of a flavor of hypothetically what they might look like.
Regarding drilling cost, if you include the assay lab cost, what is the drilling cost per meter, the total?
Yeah, it's around, I think the direct cost is $120 a meter, roughly. And then when you fully load that number, including some allocations from corporate head office, etc., I think you get in and around $200 to $220 a meter. And this is for diamond drilling. So, it's very, very competitive drilling costs, compared to industry peers.
You're doing an updated IP survey of Carangas and in the regional licenses. Say that you find a couple of large searchability anomalies. What would it take for you to pull the trigger and drill a couple of them?
Yeah, I mean, strong share price, it would certainly be one of them because we're a pre-production company and we think we're grossly undervalued, and so want to be as judicious as possible with shareholder funds. But my sense is that like the IP is one tool. You can generate a lot of false positives with an IP survey. So my sense is that we're going to want to layer on additional clues. So it might have to be an IP anomaly paired with some interesting surface outcrop or structural observations, so on and so forth, and be more of a ranking and targeting exercise. Because my guess is we could probably generate like 100 different anomalies to drill. But then we'll want to take our guys and challenge our geologists on the ground to do a full, at the rock face evaluation, and then maybe if we can rank and prioritize, there might be, once we layer on those additional geological observations, I would love to be able to drill a few of the best ones. I mean, why not do that? I had at the Roundup conference when I first joined, which is more of a technical conference here in Vancouver, there was a geologist that came up and she was just like wagging her finger at us going like, guys, you gotta step out and test this potential. You're not gonna get credit for it, and it's someone's gonna take you out, and it's gonna be not good for you. So you gotta make sure you flush out the potential. It's like, okay, like message delivered. And so I mean, I think that we got to weigh that. It's something that we're really excited for, and I think it's something that it will be in the interest of our shareholders to do. But again, as I go, one of those slides, one of the last slides that I finished my presentation on, is what's made us successful is a very thoughtful, disciplined, and methodical approach to planning drilling targets. And so I wouldn't expect anything to be different here when we look at following up on some of the IP and regional stuff at Carangas.
Sounds great. So both Carangas and Silverstrike, for that matter, are situated 50 kilometers within the border to Chile and Peru in Silverstrike's case. According to Bolivian law, foreign entities are prohibited within that range. How's that working for Carangas and Silverstrike?
Yeah, great question. So as you mentioned, foreign entities are prohibited from owning projects within that 50-kilometer range. And so, like, technically, we don't actually own the Carangas project. It's owned by a local Bolivian company owned by Bolivian nationals. And so what we've got is a joint venture agreement where we put up 98% we put up 100% of the capital in return for 98% of the economics. They've effectively got a 2% free carried interest, and so that's our joint venture structure at Carangas, which then the law does not prohibit that type of a structure within the 50K zone. And as a case in point, they're on the Brazilian side, the Brazilian border on the eastern part of the country. There's a lot of farms, there's a lot of agriculture located in that 50K zone that are owned by Brazilian farmers, and our in-house or our in-country legal advisors, they've highlighted to us that this is the type of structure that is commonly used in the agricultural industry, in particular with these folks in the east part of the country. So from a I guess a continuity perspective, this is something that has been used before in the country, and so that's how we've structured our tenements at Carangas and Silverstrike as well.
Thank you. And regarding Silverstrike, I mean, exploration activities are paused for this year. Is there a longer term plan on when those would be resumed in the future?
Yeah, I think as I mentioned about Carangas, is like we would need to be careful about putting shareholder money to work when we're not getting credit in the share price for it. Again, we talked about just Carangas not getting the value for it. Well, heck, Silverstrike's an even bigger case study in that regard. So I think we want to be in a market that's more certainly rewarding of the value that we're putting in there. I think that's aspect number one, but really the second aspect is just on internal bandwidth. Our company, because yes, we're growing. We got people like myself, and we're like I mentioned, our new deputy country manager that we hired, and amongst many other folks, we were just expanded into a bigger office space in Bolivia this year. But until we're really in a position to start ramping up and building Silver Sand and potentially Carangas, we're still a relatively lean organization, and so it's going to take us making the judgment call when we feel like we've significantly de-risked, in particular Silver Sand. It's really important for us to deliver Silver Sand properly. I think once we feel like we're in a position where we can deliver that project and where Carangas is in control, then we're probably going to be in a better position to revisit Silverstrike. Is the most important thing. We can't take our eye off the ball on what we've got in front of us at Silver Sand and Carangas. So that's something that we'll continue to make ongoing assessments of internally and as well externally in the context of whether we're getting value for any discoveries that we might make.
And great that you're cautious about issuing equity. But you will probably, with 70 million in the bank, you will probably have to raise equity this year. How much and when, ballpark?
Yeah, how much? Again, I don't want to put firm numbers out there, but this year our work plan is roughly a 15 million, $15 million work plan with the permitting at Silver Sand, the pre-feasibility study, the Carangas drilling. This quarter will be the heaviest spend quarter of the year because we're drilling with 5 rigs at Carangas, and then the resource estimate, the PEA. So all this work plan with being Q1 front end loaded, plus corporate and sort of care and maintenance activities at Silverstrike, that's roughly a $15 million work plan. So by the end of this year, we're going to have very little cash left, and we're not producing. It's no secret that we'll need to raise a little bit of money. So how much we raise, I wouldn't expect it to be a meaningful dilution exercise. I would say maximum like maybe 10% of our share, something like that, 5 or 10, it's something in that range. Again, more or less depending on, if we're in a major financial crisis and the financial markets are collapsing, then we're going to want to limit. We'll probably hunker right down and do very little equity. And versus, if they're more supportable markets, then we'll evaluate on a day-to-day basis. But yeah, maybe we 5 or 10 million shares, something like that, just enough to bolster the balance sheet so that we can have. My goal is to whatever we raise in this next instance, be enough to take us through to the point where we can then, it'll take us through to the point where we can, our next financing milestone will be to actually build Silver Sand. Like that's the way I see it lining up. That's the goal. So we're going to continue to strive towards that.
All of your assets are located in Bolivia, which in the last 2021's Fraser Institute report was ranked as one of the 10 worst mining jurisdictions in terms of policy perception. Due to high royalties, high corporate income taxes and so on, how would you describe Bolivia as a mining jurisdiction, and why do you think it is ranked as low as it is?
Yeah, great question. So I guess the first point is that you mentioned the taxes and royalties. That's maybe when we talk about a desirability of a jurisdiction, folks look at when things go wrong in a jurisdiction. A lot of the times it's when the mining company is promised to produce a certain level of taxes and royalties, and either the existing tax and royalty regime is that the company negotiated was just too advantageous for the miner, or the mine itself is just not a very good mine and it's not profitable and doesn't end up paying much in the way of royalties and income taxes. So it's funny because when you look at why Bolivia gets a bad score, it's like, yeah, because the taxes and royalties are relatively high. But I also look at that as a positive because it means that the government's going to get paid, and which creates a more much more alignment between the miner and the state. So I mean, I don't look at that as necessarily a negative. If you were to go into a jurisdiction because it had a high score because the tax rate's really low, to me that's a bit of a maybe a yellow flag, because it means that at some point someone's going to wake up and do some benchmarking against some of their peer countries and come back to you on that. So maybe point one is I think there's the 25% corporate income tax, 12.5% mining tax, which you get a 5% break if you produce doré, which we're going to do at Silver Sand. So it's 32.5% tax, and there's a 6% royalty, of which I believe the royalty goes to the state and part of it goes to the municipality. So it's it's a mechanism that redistributes that royalty back to those closest to the mine site, which is really innovative. And so I think from that perspective, we're comfortable with it for sure. And then as far as what else could, Bolivia is a mining country, and that's the point that I keep coming back to is that I mentioned Cerro Rico's been there for 500 years, 30% of the national economy, 8th largest silver producer globally is Bolivia. So from a getting projects across the line perspective, like I said, it's like we just have these miners discussions. We're not having the philosophical is mining welcome, yes or no type discussions, which is really great. And then you look around and there's perception and there's reality, and there's 3 major miners that have been operating in the country for the last 10 to 20 years. One of them being Pan American Silver, who's been operating San Vicente mine very successfully for a long time, and they were one of our founding shareholders and still own just under 10% of the company, right? If things were so tough, you think they'd be willing to double down on their exposure in the country? I mean, think a little bit critically about that fact pattern. And then the biggest one, the San Cristobal mine, which not that many people have heard of. I certainly wasn't aware of it before leading up to just in the last few months. And that was it was a $1.8 billion US investment made by Sumitomo, the large Japanese trading house, 50,000 ton a day operation, one of the world's largest zinc producers, and that operated uninterrupted for it's been 17 years now through 3 different presidents in the country, with little to no hassle. I mean, it's just been a wonderful case study of what you can achieve in the country if you do things right. So, we sort of look at that case study, Pan American, ourselves, our own experience. Like we've been able to drill, like in certain parts of the world, you have to now get a permit to drill a single hole. Like we've been able to access our land without any issues and conduct these high impact drill campaigns. So we've had a great time in the country, and I think again, imitation being the finest form of flattery, we came to this country in 2017, very few juniors operating, and now there's 6 or 10 of them now that you're picking up ground and raising capital and exploring the country. So we think that Bolivia is in a really unique window. Countries, these windows open and close in these countries. You look at 25 years ago, there were some pioneers that went to Peru, maybe 30 years ago, like Yanacocha, Newmont, when it was like Peru was this uninvestable country. Everyone painted it with a brush. And then over the next 25 years, I mean, there's some amazing mines that were built and operated, and tons of wealth was created for the countries, the host countries, the shareholders, the stakeholders. And then, you look at Peru today, where it's going through a bit of a reset as a country. And Bolivia really went through that 15 years ago, when Evo Morales was elected to power. And so we feel like there's a really interesting moment here in the country for companies like New Pacific to come in and really challenge existing beliefs. So hopefully one day we'll, as we continue to work on this, we'll be able to bring it up the rankings of the perception index.
I certainly hope so. I mean, at least you will probably get to answer the Fraser Institute's report, so that would at least help a little bit. You have on several occasions in this call mentioned that if someone else built it, and you have two large shareholders. You have Pan American with 9.4%. They have dropped their interest, but it still remains a larger one. And then you have, of course, Silvercorp with a 28.2% interest in the company. What's your relations to those shareholders?
Yeah, good question. And truth be told, it's not one that we lose a lot of sleep over. Like, ultimately, they're companies that have fiduciary obligations to their shareholders, and so we're not privy to the discussions that go on with their senior executives and their boards of directors behind closed doors. So I'm only going to be speculating, just as you would, on what their ultimate intentions are. But certainly, the Silver Sand and Carangas are two globally significant discoveries that will attract interest from companies, Silvercorp, Pan American Silver, but also others. And so I would suspect that if anything were to happen corporately, whether it's those on our register or elsewhere, we're all going to just look at the plain hard facts and determine whether or not, I'm sure as investors, Silvercorp and Pan American will look at whether or not something makes sense if an offer is presented either by either of those parties or a third party, or we go ahead and build it. And they are both seasoned industry professionals and groups to know that there is a significant value lift that comes from financing and building a mine, and if they're patient long-term investors, they can enjoy that significant re-rate. Like, I know you look at what the success Pan American had holding on to their investment in Mavericks for a long period of time. That was very successful. And you look at names like Silvercrest, which they've taken it all the way up through the value curve and created value for long-term shareholders. And Lundin Gold, you look at that one, right? Newcrest was in there at 30%, and others, and I'm sure Lundin Gold got questions all the time about what's Newcrest going to do, and it's like, well, we can't control what they do. We don't run those companies, but we can put our heads down, and if we can deliver on our promises, we can create a lot of value for those shareholders and make them happy shareholders as one of several options. And that ultimately worked out really well for everyone at Lundin Gold. So yeah, there's a host of different options, and like I said, it's not something that we lose a ton of sleep on. The most important thing for us is to put our heads down and deliver on our key value objectives, and I think that everything else will take care of itself in due course.